fortunate one. Paradise must be won. Paradise must be won. Each day and each night, through darkness and through light, cry it out to the world. Spread the word.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي نحمده ونصلي على رسوله الكريم وأما بعد Assalamu alaikum wa rahmatullahi wa barakatuhu. Dear brothers and sisters, we are continuing with our discussion on differences between Islamic bank and conventional banks. And so far, you must have realized as to how an Islamic banking works and how an Islamic bank is different than the conventional banks. So the business model of an Islamic bank, how completely it is different. And when we talk about different structures of Islamic banks and different ways of Islamic banks to invest the equity which they receive from the depositors, it is a totally different ballgame than the conventional banks who only rely on lending at fixed interest rates, and that's it. Here we become part and parcel of the businesses. We invest our equity with them. We are with them in sickness and in health. And the recent crisis, how the Islamic banks help the customers who were in problem by restructuring their outstandings, debts. And when I say debt, obviously it is a debt which has transpired from a transaction. It's transactional debt. It is not an interest-based debt. Like, for example, if certain goods have been sold by the Islamic bank on murabaha basis, then the customer has to pay to the bank a debt. So this is the debt resulting from a sale transaction. If the crisis did not allow those customers to pay back in time due to no fault of theirs, then certainly the Islamic banks were there to help them to restructure and to allow them more time, which is again in light of Quranic teachings. In case of a genuine problem, to help the debtors so that they can pay your debt in an extended period. And we have proved, we have done that. The conventional banks also restructured their outstandings, but they took higher interest rates in doing so. Islamic banks in murabaha, in istisna, in the sale contracts, did not do that, because as per Sharia, you cannot increase the amount of debt just because the debtor could not pay in time. So differences are coming out in open. And so far, the only common element between the conventional bank and an Islamic bank is the word bank. The rest of the business model is totally different than the conventional banks. We would like to show more insight into the Islamic banks, but before that, let me share with you a live example of how Islamic banks operate. And in this case, I would like to tell you about a transaction where I was personally involved in an Islamic bank, where I entered with a customer of the Islamic bank into a mudarba, and mudarba was based on a business plan. And due to certain genuine reasons which were beyond the control of the customer could not generate the profit that it had projected to generate. And the actual profit generated by the customer was much lower compared to the projection. And the projection was based on the actual track record for the last 5, 6, 7 years. And there was no reason for the Islamic bank where I was working to believe that the customer will not generate the same level of profit for the next year as well. So the bank entered into a mudarba contract with the customer, handed over the mudarba capital to the customer to be invested by the customer as mudarib into the business. which was generating good profit. But when the books were closed and the customer submitted the books, it was found that the Mudarba was not able to generate enough profit. The amount of the profit generated was much less than what was projected. And then the reasons, when the Sharia board auditors investigated, were found that due to certain genuine reasons, and the reasons were that the customer was involved in the import of poultry. And at that time, due to some bird flu, the government of that country had banned the import of poultry from his established sources of supply. And as such, the customer could not import enough. He had to re-establish the supply sources at a much higher cost from the new suppliers, and then the new suppliers charged upfront advance payment, and then they sold the goods, the poultry, at a higher price, and it eroded the profitability almost completely. If a conventional bank would have given a loan to that particular customer, the customer was responsible and liable to return the full principal amount to the conventional bank, as well as the interest which was to be charged, without any concern as to how the capital, the loan capital, was invested by the customer, irrespective of any thought to be given that the customer is in problem. But the Islamic Bank did not do that. Islamic Bank took its share in that small profit because it was beyond the customer's control. At the time of submitting the feasibility study, the customer could not envision, could not foresee that there will be a bird flu crisis coming 3-4 months down the line after getting the money from the bank. Here we're talking about fairness, and I can continue to give you many examples of fairness. The bank was content with the small profit, which was permissible profit, which was halal profit. If the bank would have imposed a condition that what to do, you gave us a rosy picture that you will generate this much profit, and as a result we invested with you. We don't know what you did with that, but give us this much profit. From Sharia perspective, that profit would not have been permissible. It would not have been a halal profit. So that profit would have been discarded by the Sharia auditors because it was not the actual profit which was earned by the customer. It means that the customer basically is giving from its own sources, not from the profit. And one Sharia principle we should always remember is that when an investment has been made into an asset or into a business, the return which comes out from that business and from that asset is the halal return, and that return will be distributed between the shareholders of the bank and the depositors of the bank. The underlying asset or the underlying investment transaction must generate a return, and that return is halal. It means the money being medium of exchange, i.e., the money is being invested in the asset or in an investment project, and the return which is coming out is halal. If you simply hand over the money without getting bothered too much about where the money will be invested, and the customer will continue to pay you a regular profit and will pay you your equity at the end of the contract period, but you did not, being an Islamic banker, you did not think too much about where the money is coming from. This will not be the correct way of doing Islamic banking. Every Islamic banker must pause and do the due diligence and see where the money is being invested by the customer and how the return is coming out. And once the Islamic bank has ensured that the return which is coming out is genuine, then only the investment should take place or the sale should take place. Obviously, for the sale transaction, you know already on day one, as we discussed earlier, that this is the cost and this is the profit. But more it is applicable, and the responsibility of the Islamic bank becomes more when Islamic banker is investing the funds in an investment contract like mudarba or musharka or investment wakala. Let us take another example of differences between the Islamic bank and conventional bank, and that is related to the retail banking. The credit cards. This is the most expensive credit, generally it is said. And when it is said, it relates to the conventional banking credit cards, because conventional banking credit cards are quite expensive. On a monthly 2 to 2.5% is being charged, and then if you delay, then they charge you certain penalty as well. How a credit card works in an Islamic bank? In an Islamic bank, ideally the credit card works on qard hasan basis. It means it's a loan. It is a loan from the bank to the customer. And when the bank gives the card, there is a limit set, that this is the limit of the loan that you are allowed to withdraw. Either you withdraw cash, or you use at a POS terminal, or you use in any other transaction, but this is the amount of cash that you can draw, or you can buy certain goods with that or services with that. And Islamic bank card cannot be used in non-permissible avenues. It cannot be used in bars, in casinos, in the other non-permissible activities, because there is a special restriction. So you can use the Islamic bank's card for the right purposes. But when you use the card, you are indebted to the Islamic bank by that amount. How Islamic bank will manage this? Islamic bank does levy service fee. Some people say the service fee is actually compensating for the lack of interest, which is not the case. The service fee is taken to provide the services. If you have taken your card from Riyadh, for example, and you are using it in London or US or any other part of the world, cash, or you would like to purchase certain goods, sitting in London or any other place away from your origin, you can get the work done, because all the credit cards are linked through a system which is Visa system or the MasterCard system. So that is a vehicle. It means it is allowing you to use the card anywhere in the world. Millions of terminals, the cash machines, the POS terminals. The service fee is charged by the Islamic bank to provide you the service, not to make profit out of that, because qard hasan, you cannot make profit out of that. And that's why the Islamic bank levy a fixed fee on the card depending on the services, which has got nothing to do with the usage, which has got nothing to do with either you are using it at the hilt, or you are using the card in the middle, or you are not using it at all, but still you have to pay that fee. If you want to keep that card, you have to pay that fee. So this fee actually has nothing to do, there is no linkage between the utilization of the credit card and the fee that you pay. So this fee is paid for the services. This fee is not paid for the utilization as to how much, this level, or this level. So this is another example of how Islamic bank's credit card is different than the conventional bank's credit card. We'll take a short break, and when we come back, we'll continue with our discussion. Please stay with us. Thank you.
Spread the word of Islam.
Assalamu alaikum wa rahmatullahi wa barakatuhu. Welcome back. Before the break, we were discussing about the differences between Islamic bank and conventional bank relating to the credit cards. And I explained to you that the credit card are given as a loan, and there is a fixed fee which has got nothing to do with the utilization of the card. There was a very interesting analysis done by Islamic bank, and which proved that the people are better off by taking a fixed fee based Islamic credit card compared to the conventional bank's credit card, because the conventional bank's credit card has the high interest rate, plus it has got the penalty if you don't pay in time, and there are some other charges for example, credit shield, and there are other charges. But when it comes to Islamic bank credit cards, it is a qard, or it is a loan given by the Islamic bank to the cardholder. And obviously, in Sharia, there can be no interest, or there can be no rate of profit per se on any loan. So this is loan, which is in Islamic Sharia, which is without any extra amount, without any charge. This is another difference between the Islamic and conventional banks. Home finance, we discussed earlier on briefly, but let us see in home finance how the Islamic bank's customer is better off. Another analysis was done for the amortization of the amount that the Islamic bank has to actually recover the investment which the Islamic bank has made in a property. And it goes like this. The Islamic bank will purchase the property from the developer or from the market and would lease it to the customer. And on day one, when the customer will sign the lease agreement with the Islamic bank, there will be a schedule to tell the customer that amortization will be as per this schedule. It will not be that you are taking certain amount from the customer like in conventional bank as an installment, and you are first servicing the interest, and then whatever is left over will go to service the principal. Here we are talking about a schedule which will give the home finance lessee, the customer, a fixed schedule for the amortization of the investment of the Islamic bank in that property, i.e. parallel to the principal amount being repaid, for example, to the conventional bank by a mortgager rather, because mortgagee will be the bank, the conventional bank. And here this is also a misnomer. Islamic mortgage lender, I see it all the time in the press. This is a misnomer. First of all, there is no lending in Sharia, there is no borrowing in Sharia, and there is no interest in Sharia. So to call it an Islamic mortgage lender is a misnomer, and this is to be corrected by the people, the journalists, by the people working in media, print media. Because the title is held with the Islamic bank. And if the title is held with the Islamic bank, then how can there be a mortgage? Mortgage will be if the title is with the customer, and then the customer is mortgaging it to the Islamic bank. Here we are talking about a lease transaction where the Islamic bank is the owner of the asset, owner of the property. So there is no question of mortgage. If you own certain thing, will you mortgage it to yourself? Of course not. As such, the Islamic mortgage lender, this term is to be corrected. It is Islamic home financier. This is much better because these institutions who are doing this activity are actually purchasing, using their equity in purchasing the properties, and then they are leasing it to the customers. However, if the property is sold on murabaha basis, which is a sale contract, and in any sale contract, the ownership or the title to the subject matter of the sale contract goes away from the seller to the buyer. So if the Islamic bank is selling a house on murabaha basis to the customer, the title will be with the customer, not with the bank. And in order to secure the bank's interest, the bank can mortgage the title to itself. In that case, it will be correct to say that the property is mortgaged to the Islamic financial institution, because the title is not with the Islamic financial institution, it is with the customer, if it is on murabaha basis. But if it is on ijara basis, then it will be held with the Islamic bank. So there is no mortgage here. The title itself is with the Islamic bank. Here, the Islamic bank will give you a fixed schedule whereby the amortization will be shown as to how, on a monthly basis or a quarterly basis or on a periodical basis, the Islamic bank's equity in the property will be amortized. And a time will come that the Islamic Bank will have recovered its equity fully, and that will be the time when the Islamic Bank will sell the property to the customer by way of a separate sale contract. Because in Sharia, the title does not get transferred automatically. In some English law agreements, I have seen that the title is automatically getting transferred bit by bit. This is not the case in Sharia, because Sharia would like to be on firm ground. So we are talking about a system which is completely unambiguous, which is very clear and fair, and the practices are fair, and there is a lot of transparency. And here, in this case also, the asset title will be transferred to the customer upon successful completion of the lease. In the following episodes, our experts on home finance will take you through a detailed discussion as to how different types of leasing is done. There is a normal lease, there is a forward lease for a underdeveloped asset, the asset which needs to be developed. And there is a home financing done on murabaha basis, istisna basis, musharaka, mutanaqisa basis. So you will see in the following episodes as to how fascinating and varied the home financing is compared to the conventional banks, where there is only one model which fits all. Here we are talking about different models, and we are looking at the real situation, and accordingly the structure is ready to be adapted. And that structure is much fair, and that structure is very transparent, and it needs to be plain in detail, which will be coming in the following episodes. Again, we will talk about some other aspect, which is the project financing. How the project financing is done Islamically, how different it is compared to the conventional banking. We're talking about the greenfield project. We're talking about any project which needs expansion. We're talking about the project which may be, for example, a power plant. It could be a gas exploration, oil exploration, the industries, the manufacturing units, anything. Here, if the customer would like the Islamic Bank to finance the expansion, for example, then there are many structures available, again, compared to one structure of lending with the conventional banks. The Islamic Bank will see the situation and accordingly will present a structure to the customer which will satisfy the customer as to the need of the customer as to how it should be done. One example, what about the expansion of an existing project? Here there are various ways. One way could be that the Islamic Bank will enter into an istisna agreement with the customer, whereby the Islamic Bank will take it upon itself to build and deliver on a fixed date the expanded part of the project. It could be also the other way around, whereby the Islamic Bank is purchasing the expanded project from the customer and then leasing it to the customer. And in detail, these things will be discussed in the following episodes. With that, I would take your leave. Inshallah, we'll meet in the next episode with another subject. Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh.
Spread the word, oh man. Spread the word of Islam. Oh, fortunate